We will be going over all of your Tesla stock news that you need to know today, including some really good news out of China in regards to the Tesla halo effect. But holy crap, we have some breaking news from Nick Timiraos, which is largely seen as the Fed's mouthpiece. We have a lot to get into here in this video in a short amount of time, so let's get started. Nick Timiraos says today, the greater risk now is that taking too long to cut rates causes damage to the labor market that is hard to repair. In November, for an example, the hiring rate in the US dropped to its lowest level in 10 years, a sign more companies might feel they are overstaffed. Here is the chart that Nick Timiraos puts in his article. The article's headline is Plummeting Inflation Raises New Risk for the Fed. Rising real interest rates. And you can see once the real rate, highlighted in darker blue here, gets to about this level, about 3%, you tend to see things start to break. Over the last 20 years or so, the only real recessions we have went into, besides the Rona, which was artificially based, I think you can agree with that. It wasn't a cyclical kind of economic recession. It was a abrupt, just shut everything down. Obviously, we headed into a recession. But in 2000, you had your real interest rate higher than 3%, lower than 4%, so about 3.8% recession. In 07-08, the real rate was almost exactly where it is now, and then what happened? Boom. Recession. Now, for those of you guys that don't know what the real rate is, it is essentially inflation minus the Fed funds rate. So now you're 3% positive, even whereas like 2021 and 2022, as inflation was outpacing or higher than the Fed funds rate, you were actually seeing, well, a negative real rate. The real rate is largely seen as the real interest rate out there in the economy, the more important one, if you will. So based on what Nick Timiraos is essentially saying here is the Fed may actually indicate they're going to cut rates a little bit sooner than what the markets are currently expecting. That would be great news for Tesla stock investors. We talked about this a little bit in the last video, but I want to highlight this point because I believe I did not speak enough about it. If the Fed starts cutting rates, obviously it will bring down treasury yields. Now, if a treasury is paying, let's say a 10-year treasury, 5%, well, Tesla's, let's say 2030 earnings or 2034 earnings are going to be worth a lot less because in 10 years, if you can get 50% risk-free on your money, you're willing to pay less per dollar for Tesla stock based on per dollar of EPS for Tesla stock. So maybe Tesla trading at a 50 times forward PE, which is roughly where we're trading at right now, seems attractive if a 10-year treasury is yielding you 4%. Well, maybe paying a 75 times multiple or 100 times multiple would be reasonable if a 10-year treasury was paying you 2%. It simply comes down to your risk premium. If you can get handsomely rewarded for buying treasuries over a, let's say, 10-year period of time, and you don't have to take the risk in equities, a lot of people don't do that. A lot of people want to take the safe route and get the, 5%, 4% 10-year treasury yield. Whereas when treasuries were paying you basically nothing in 2021 and 2022, it was a lot easier to justify, let's just be honest, bad companies doing well in our markets because there was no other alternative than to invest in markets. So the Fed lowering rates quicker for the right reasons are always going to be a good thing. Now, what is the right reason? Now, the right reason would be inflation falling and the economy doing well. I am here to remind you yet again, if the economy starts to falter, you start to get more cracks in the labor market specifically, stocks will sell off and there will be fears of a recession and, well, the bottom would not be in yet for Tesla stock. So if you are in the recession camp, well, not financial advice, just my opinion, markets are going a lot lower from here. The Fed meets on Monday and Tuesday And then we get the Fed meeting on Wednesday. Now, the Fed is not expected to do anything dramatic on Wednesday. We're expecting a continued pause. In fact, there's only a 3.1% chance the Fed will cut rates and 0% chance the Fed will raise rates. So we're not expecting anything to happen, but it's going to be more so about what the Fed says about the rest of 2024, specifically for March 20th. There is something that could happen that will be very bullish for Tesla stock if it indeed does happen. That, my friends, is an end to quantitative tightening. Currently, the Fed is rolling off, fancy way of letting bonds roll off their balance sheet or selling bonds, about 30 billion every month of mortgage-backed securities and 60 billion worth of treasuries. That's why the Fed balance sheet has went from over $9 trillion down to about 7 trillion, 7.5 trillion or so here today. Well, largely unnoticed by the markets, the Federal Reserve announced on January 24th that they will end the Bank Term Funding Program. Bank Term Funding Program is being utilized at an all-time high with $167.7 billion worth of collateral-backed loans. Now, this Bank Term Funding Program, essentially, the Fed is taking bonds that are underwater from Citi, Bank of America, other different banks that are maybe upside down 30, 40+% on their bonds. And they're giving the banks par value. The Fed is holding the bonds until maturity, but that way the banks can use that money today to fund their operations as if they never had a loss to begin with. This thing continues to be utilized every day more and more and more. Last Friday, or last Thursday, you were only 161 billion that was utilized in this facility. Now you're 167.7 billion. $6 billion plus of additional loans were taken out on Friday alone. Now, why is the Fed ending this program coming on March 11th? Now, I imagine there's still going to be the same 167 billion of loans out there, but they're not going to be taking on any additional loans to banks, right? What's here is going to be here, and this program will be done. The only logical reason I could think of here is because coming this Wednesday, the Fed is likely to announce an end to quantitative tightening coming by the next Fed meeting, and that will be on March 20th. Notice the timing. The Bank Term Funding Program ends March 11th. The next Fed meeting is March 20th. Now, if the Fed announces an end to quantitative tightening, what this will do is cause investors to start buying the bonds. Take a look at the chart of TLT. I think this is vitally important to fully understand. TLT is the ETF that tracks the 10-year treasury. So if you start to see investors buying the bonds, what that is going to do is send bond prices up and yields lower, right? Quantitative tightening has caused bond prices to fall and yields to rise. So if the Fed ends quantitative tightening, bond prices are going to rise. That is going to help out the banks. Let's say they bought treasuries at 120 or 130 or 140. If treasuries start to increase from here, that's going to help them on their unrealized losses. But that's also going to drive down interest rates in the bond market. That, my friends, is very bullish for Tesla if it does actually happen because of what we just mentioned. If you can get 4% on a 10-year treasury, why the heck are you buying Tesla? Or any other stock for that matter. If you are someone that is in retirement, or if you are someone that is investing a lot of people's money, you're going to utilize money market funds or just outright buy treasuries themselves. That is precisely why money market funds are sitting at all-time highs right now with about $6.14 trillion sitting in them. When the Fed does end quantitative tightening, as I expect they will announce this upcoming Wednesday, you're going to see a lot of this money come back into the markets because pretty much instantaneously, money market yields are actually going to fall. then it looks more attractive investing in longer term growth opportunities. Now, we will talk about all of this a little bit more, the direct implications this could have for Tesla stock in the next video. But I did want to point this out because Nick T is essentially suggesting, well, a Fed U-turn, a Fed pivot, a reverse rug pull, whatever you want to call it, from the Fed could happen at this upcoming meeting. Now let's get into all of your Tesla specific news. First up, a fully loaded Porsche Macan electric car can cost over $163,000. Who would be buying this, you ask? Well, apparently Porsche says for those balling on no budget. Yeah, that's literally what they just said. Now, I think the biggest story of the day today is actually the attention in China that the Cybertruck is receiving. Look at this crowd of people taking pictures, talking about, presumably excited about the Cybertruck as the Cybertruck is going through its tour in China. There's just a sea of people literally everywhere. Now, some people are starting to speculate that Tesla may create a smaller Cybertruck that would have an easier time becoming road legal in China. And imagine the potential opportunity there. I mean, just imagine what the halo effect could be like in China. China alone last year sold over 8 million purely EV vehicles. The US sold about 1.5 million. The Chinese market is magnitudes larger than the US market. The Chinese market is arguably more important for Tesla at this point than even the US market. Even though Tesla sells the most vehicles here to the US every year, that is going to change. Thus, the halo effect in China is a lot more important than a potential halo effect in the US. In a little bit of not so great news for Tesla, it looks like some very large trades are being targeted around the 175 put expiring by this upcoming Friday. You also have some pretty large trades expiring by February 9th. Again, around the 175 put. Here you can see another image of people crowding around a Cybertruck that is also participating in the tour around China. Goldman Sachs says we continue to expect the FOMC to deliver a first cut in March and 5 cuts in total in 2024. The main reason is that progress on inflation has already surpassed the threshold the FOMC has given. The labor market could still provide additional reasons for the FOMC to cut sooner rather than later. Carl Quintanilla, I don't know if I'm saying his name right. You've seen this guy on CNBC many times. He's been on CNBC for 24 years. He says it's interesting that in the past 24 hours, the normally optimistic Goldman Sachs and former Fed official Esther George in the Wall Street Journal have hinted that the labor market could finally be poised to disappoint. Esther George says the labor market is such a tricky one. Before a downturn, it always looks like it's not too bad, and then it goes south quickly. Gary Black writes on X, the number one rule, buy low, sell high. Amusing to watch so many Tesla Uber bulls far less optimistic about Tesla now than they were a few weeks ago. Should be the opposite, with Tesla down 26% year to date relative to Tesla's underlying value, which hasn't changed. Too many investors letting Tesla's stock price drive their investment outlook. Management not providing guidance on volume and margins is not the same as forecasting lower volumes and margins. And I think that's an important point to point out, that if we have no idea where the EV market is going to be or what it's going to look like in 2024, how can we reasonably expect Tesla to know 3 weeks into the new year? I mean, we have no idea. How are they going to know? Yeah, they have the order flows, but they don't know what order flows are going to look like tomorrow or next week or the month after. Good news is at this point, we are no longer having high expectations for Tesla, so Tesla should be pretty easily able to beat the low expectations. And I do believe as long as next week is not an utter disaster with big tech earnings, the Fed on Wednesday, your non-farm payrolls, and your unemployment report on Friday, you're probably going to see the 180 level serve as a support. Markets trading at all-time highs does not leave me too optimistic about next week, but again, we will break that down more in depth in the next video. Now, ever since Tesla did not give us official guidance, markets are going to be very keenly paying attention to your weekly insurance registration numbers coming out of China. These Tuesdays are going to be really good or really bad for Tesla stock. So this upcoming Tuesday, we have heard rumors at least could be another strong weekly number out of China, but we shall see. Global inventory numbers for the Model Y downticking nicely. I am very happy to see this. Seeing inventory continuing to rise for the Model Y was a little on the alarming side. You just hit a high as of January 27th at 9,289 Model Ys in inventory. Why is that happening? Well, either they are producing a lot more or they're not selling that many. So you are seeing a down move from almost 9,300 to today at about 8,500. So that is quite the reduction overnight. That I would say is a positive. Now the Model X, S, and the Model 3 are basically unchanged. You're not seeing much change here at all, suggesting there should be really good demand for these three models. I will also note that yesterday, the Model S was trending on X with over 30,000 posts just for the Model S alone. Google Trends data for the Tesla lineup is unfortunately continuing to decline, but this is pretty normal towards the beginning of a new year. I expect once we actually start getting deliveries of the new Model 3 here in the US, or at least larger numbers of them, you're probably going to see search trend activity pick up, at least for the Model 3. And I do believe the Cybertruck will ultimately have a halo effect here in the US, but it's going to take some time for that to actually happen. Most people have no idea a Cybertruck exists. When they actually start seeing them out on the roads, that's when you could start seeing delivery numbers, well, getting a boost from a halo effect. Tesla continues to run about 400 different ads via Google. Over here on StockTwits, Tesla on the sentiment gauge is reading extremely bullish at 80, which is down a little bit from yesterday's number at 92, but that does tend to happen over the weekend. You do tend to see less people talking about stocks, less people that are commenting on something like a StockTwits, but still seeing 80 for the sentiment over the weekend. It's a pretty good sign people are getting more bullish on Tesla stock. Same is true for the message volume, so this is not super shocking. One day ago, you were at 29. Now you're at 18, which is categorized as extremely low message volume. But again, that's pretty normal on a weekend. And really, when you're not seeing a lot of Tesla specific news, it's not like we're getting a whole lot of news. The biggest news actually for the day today is the massive crowds that are building outside the Cybertrucks that are being shown off in China. The participation ratio is on the high side, technically categorized as normal at 54. This is a lot better than what we have seen recently when numbers have been in the low or extremely low percentile. Tesla currently has 2.92% short interest of free float with $14.72 billion worth of short positions. This is because not necessarily shorts have been covering, but Tesla's stock has been falling, so the dollar amount sold short has also been falling. If you do start to see a spike or a rise in Tesla stock, you will see the shorts starting to lose lots of money quickly. On Friday, you had some very positive hedge fund and institutional option activity in Tesla stock. In fact, it was 68% positive, and this was one of the best days we've seen for Tesla stock in over a month, so that makes sense to me. The dollar amount was on the low side at 847 million with 861 different orders. Now, over the entirety of the past week, option activity has actually been on the low side and neutral overall, with a positive order value of 49% with $3.69 billion worth of option orders and 6,420 individual orders. On Friday, you actually had volume of about 50% to the call side and 50% to the put side, so almost exactly neutral. The 10 and 2-year yield curve inversion is now only inverted 19 basis points, 0.19%. Coming on Wednesday with the announcement to the end of quantitative tightening, as per my expectations, you could actually see the yield curve go positive. That could spark some near-term concerns and fears about a potential recession. So something to be watching for and something we'll talk about more in the next video. The percentage of stocks above their 50-day moving average is currently at 65.23%. This means the markets are really top heavy here, as the average stock is, well, barely above its 50-day moving average, let alone other moving averages. If you see earnings falter next week, markets are going to be in for quite a problem. Tesla stock on Friday was up 0.34% in regular trading. A vast majority of the day, Tesla stock was up over 1%, which, if we had closed above 1%, that would have been the best close since December 27th. We did not quite get that, but we did get quite a rise in after hours as well, up 0.45%. It seems like Tesla stock is starting to base out here in the low 180s. We did close after hours on Friday at $184.08 per share. I will also point out Tesla stock is still extremely bearish. You can see the RSI is sitting at 18.20, which is one of the most oversold levels Tesla stock has ever been at. The only time you were this oversold was back here when Elon was selling massive amounts of Tesla stock, over 20 billion worth of Tesla stock, to fund the purchase of X. So let me tell you right now, any good news, a stronger weekly insurance registration number out of China, literally anything could cause a massive move higher in Tesla stock. Let me know what you think about all of this information in this video down below in the comment section. Hit the like button as well as subscribe to the channel if you made it to the end of this video, and stay tuned to the channel for the next video. We're going to break down everything you need to know about the upcoming week, the economic data, the Fed, earnings, and my expectations about all of them and what kind of implications that could have for Tesla stock. And let me tell you right now, they're huge. So thank you for watching. If you guys want to come trade with us live in real time, check out that link down below in the description of this video. You guys have a fantastic rest of your day. Go Lions, baby. And I will see you in the next one.